This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you in part by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. We are TheStreet.com.
Opposite directions, Boeing climbs to record highs while Caterpillar warns of tough times ahead. What's driving these two widely held stocks? And which one is worth your money now?
Buy or bail. The S&P is sitting near record levels, and you likely own some of the reasons why. So which names have helped the rally, which ones have hurt, and which ones should you buy, sell, or hold?
Decision time. Detroit officially makes its case for bankruptcy, trying to get the cash-strapped city out from under a pile of debt. But retirees and pensioners are fighting back, trying to protect benefits that could be cut. This is Nightly Business Report for Wednesday, October 23rd.
Good evening, everyone. The tale of two big-name Dow stocks, Caterpillar and Boeing, set the tone on Wall Street today. For Boeing, blue skies ahead after the aerospace giant reported a surge in quarterly earnings, a huge backlog of orders, and raised its outlook for this year. Shares soared more than 5%. But Caterpillar found itself in a hole. The world's largest maker of earth-moving and mining equipment said profits plunged last quarter. It cut its earnings forecast again, and the stock tumbled 6.5%. Well, that mixed picture from two blue-chip Dow companies rattled investors as they worry about growth forecasts from corporate America. And so the record-breaking run-up in stocks took a step back today. We have two reports taking a closer look at Boeing and Caterpillar. We begin with Jackie DeAngelis and those disappointing numbers from Big Cat.
A big earnings miss for the world's largest maker of earth-moving equipment, Caterpillar. Profit declined almost 43% from a year ago, missing analyst expectations by 21 cents a share. And it wasn't just profit that fell short, Cat's revenues declined 18%. And the company's 2014 forecast turned flat, plus or minus 5% compared to this year. Mining was Caterpillar's main challenge in the third quarter, according to Chairman and CEO Doug Oberhelman.
We saw the mines really explode as India grew, China grew, the famous BRICS grew, and world economic growth through the big recession outside the U.S. and Europe was pretty good. I think they got a little bit ahead of themselves. The markets got a little bit ahead of themselves.
He told investors the company worked to improve operating efficiency, but also said those improvements, unfortunately, were overshadowed by a drop in sales.
Our balance sheet's pretty well bulletproof right now. We're ready to go. We just need a recovery in mining, which at some point will come. I've seen cycles off and on over my 39 years. This one is pretty acute in mining. The rest of the business is hanging in there.
Cat also announced 3,000 layoffs and warned that more could be coming. So it's no wonder investors are taking a pause. Longer term, Oberhelman is staying positive.
I'm hopeful that I'm not going to make any forecast here, bullish forecast on mining, but my bet is it's going to be sooner than later, and I really hope late 14, 15 is when we start to see that.
Still, analysts said they were expecting more from a bellwether like Caterpillar, and that for now, Cat has to keep digging for answers. For Nightly Business Report, I'm Jackie DeAngelis.
The plants where Boeing builds Dreamliners, 737s, and other commercial airplanes have seldom been busier. In fact, with the company on pace to deliver a record number of new planes this year, it's the commercial airplane business that is driving Boeing's soaring profits. Last quarter, the company took in more than $22 billion, an increase of 10.6%, thanks to more planes being delivered. And yet, Boeing's backlog of orders has climbed to a record high. The outlook is a complete change from just 9 months ago, when two battery fires aboard two different 787 Dreamliners led to the FAA grounding the planes and investors dropping shares of Boeing to $70. Since then, Boeing's stock has been on a steady climb, lifted in part by the Dreamliner, which is fixed, flying, and bringing in new orders. The backlog of Dreamliners stands at 890 planes, with 131 ordered this year. Boeing builds 7 Dreamliners a month right now and will go to 10 per month next year. Now the company says it's boosting 787 production even further, building 12 per month by 2016 and 14 per month by the end of the decade. The strength of commercial airplanes is welcome news, given the pressure Boeing is seeing with its defense business. While Boeing's defense and space business brought in $8 billion last quarter, the government sequester and the prospect of more budget cuts means orders for new military jets and defense projects could be limited in the future. Phil LeBeau, Nightly Business Report, Chicago.
Well, another Dow component reporting third quarter profits after the closing bell. AT&T, the telecom giant, beat Wall Street estimates by a penny a share. Profit there, $3.8 billion, even though revenues were slightly below forecasts. AT&T added 363,000 new wireless subscribers in the quarter, but that was way behind the bigger rival Verizon Wireless, which added 927,000 during the same period.
Those disappointing earnings from Caterpillar that we just told you about, and a mixed bag of quarterly results out today, pulled down stocks, and the S&P 500 snapped its 5-day winning streak. The Dow lost 54 points, the Nasdaq down by 22, and the S&P fell 8 points. Over in the bond market, Treasury prices continue to rise, pushing the yield on the benchmark 10-year down to 2.5%, its lowest level since July.
Well, most of the nation breathed a sigh of relief last week after lawmakers finally resolved the debt crisis and reopened the government, at least for a few months. And mutual fund shareholders reacted by putting money to work. The investment company Institute says that investors in U.S.-based mutual funds sent nearly $3 billion into stock funds during the week ending October 16th, marking a dramatic turnaround from the 3 previous weeks when investors pulled billions out of equities and put them into bonds.
So which are the most popular stocks found in those mutual funds, the ones people own in their retirement accounts and may want to follow a little more closely? Dominic Chu looks at some of the most widely held stocks and what makes them so popular with institutional investors.
Even if you aren't an active investor or trader, chances are if you've got a mutual fund, IRA, or 401k plan, you've got some of these stocks. Think of them as America's favorite stocks. Mutual fund data firm Lipper says some of these stocks are the most owned by those mutual funds, and they include names like Google. Shares are up around 45% in 2013, more than doubling the return of the Dow Jones Industrial Average. Then there's the king of America's big banks. J.P. Morgan Chase has been at the center of trading scandals and alleged mortgage misconduct, but CEO Jamie Dimon has managed to steer the company through the rough waters, and the stock has risen. On the energy front, Chevron has been a gainer, but its 11% rise this year has underperformed the broader market. Then there are a couple names that just about every investor is familiar with. Apple. After hitting a record high of $705 in September of last year, the stock has steadily drifted lower despite the rollout of new products like the iPhone 5S and 5C models. Some analysts think it could be a while before we see those record stock gains again.
The old days of seeing the big advances are probably going to be more challenged for Apple going forward. A lot of that also might be this, the law of large numbers.
Then there's General Electric, GE. The industrial giant is becoming less dependent on its financing arm and more focused on enabling the growth of the world's energy and infrastructure efforts. Some experts believe these types of companies will be the outperformers.
In particular, we want to own the stocks that have the greatest exposure to growth. We think investors are going to be looking to industrials as the place to be.
Just because a stock is popular among mutual funds doesn't necessarily mean that it's the right stock for your portfolio, so doing your homework is critical. For Nightly Business Report, I'm Dominic Chu.
Well, you heard what Dom just said. So should some of the stocks he mentioned be in your portfolio or not? Let's ask Mike Holland. He's chairman of his own money management firm, Holland & Company. Mike, great to see you again.
Ty, great for having me. Thank you.
In my notes, it says that you see this bull market as the most comfortable bull market you've seen in a long time. What do you mean by that? And do you mean that you would be comfortable yourself putting money into, let's say, a broad S&P 500 index fund?
One correction to what I said, because sometimes I mumble, Tyler. Most uncomfortable bull market. And the reason I said uncomfortable, it's because people from the beginning of this in 2008, 2009 have been skeptical of the market. And that's one reason these valuations are so low and attractive as I find them still to be. And to answer your last question, I would absolutely, if someone didn't want to pick individual stocks or didn't feel competent to do that or didn't have the time, I would absolutely talk about one of the index funds like Vanguard or someone like that.
All right, so Mike, let's talk about what Dominic was just reporting, America's favorite stocks. And at the top of the list, we're going to talk about Apple. Would you buy, sell, or hold this stock? It's now trading at $525.
Great question, Susie, because in Dom's report, I would absolutely agree. The stock has been an underperformer, and yet the company has been an outperformer. You look at the excitement about the new iPhone, the more expensive one. I just came back from China, as you know. They are frothing at the mouth to own these things. So the customers and the business doing great. The stock really, to Tyler's question a second ago, really the stock is underperformed because people are skeptical.
All right, let's move on to Google then. Buy, sell, or hold on that one. You like it?
I own it and I love it. I love, Tyler, companies whose names are verbs. And, and this one is, once again, at a valuation, it's more expensive, as Dom was just talking about, than it was a year ago. But still, with a company growing over 20%, as large as it is, and less than 25 times earnings, I think it's a steal.
All right, so General Electric is not a verb, Mike, but what do you think of it at $25?
I think Jeff Immelt, to what we heard a second ago, has repositioned the company, a huge company, in a way that is going to take advantage of the changes we're seeing around the world. I think the stock is doing better and will continue to do so. I own it as well. So.
How about J.P. Morgan? This has been obviously a very troubled company, at least as far as its legal costs are concerned. Would you be comfortable owning that one?
I am comfortable, to use that word, and I do own it. And it's a little bit of a reverse from what we just talked about a second ago, Ty, with Apple. This one, the stock has actually done reasonably well, given these headlines, the $13 billion going to the government, et cetera, et cetera, et cetera. The stock has done reasonably well, and I think in large part because the market believes here that the management can get through this. And I think it is the class name and the class management in the industry.
What about Chevron, Mike? It's up 11% year to date. I know it's not in your portfolio, but would you buy it, sell it, or hold it?
If I had to do one of the three, I'd buy it, but I would prefer, which I do, I own ExxonMobil. I think I'm huge on managements that perform well over a long period of time, and more recently, ExxonMobil's management has done extremely well. I expect them to continue to do so, and given the valuations, I would absolutely own Exxon rather than Chevron. So you think Exxon is the best of breed there. Quick thoughts, very quick, on the two stocks we kicked off the broadcast with, Caterpillar and Boeing. Don't own either of them, but if you said I had to own one or the other, I'd own Boeing, not Caterpillar. The mining cycle is going to be longer than people suspect, would be my guess. Mike, you're becoming a verb yourself. Ty, thank you. Mike Holland, chairman of Holland & Company. Nobody does it faster or better than Mike.
Well, speaking of Apple, billionaire activist investor Carl Icahn is back on Twitter, focusing his attention on Apple stock, its CEO, and its massive stockpile of cash. Today, the man who just made nearly $1 billion in profits from selling half of his Netflix holdings set out a cryptic tweet saying, quote, "Just sent a letter to Tim Cook. Full letter will be disclosed on my website, the Shareholders Square Table, which will be launched tomorrow." Well, reports say that Icahn's letter details his approximately $2 billion investment in Apple and his push to boost the company's stock buyback plans to $150 billion. That's $50 billion more than Apple's current program. And still ahead on Nightly Business Report, reinventing the way smaller companies raise money and how new rules proposed by regulators could let you own a stake in firms just by using the internet. But first, let's take a look at how the international markets closed today.
Earlier this week, NBR told you about that $13 billion settlement J.P. Morgan Chase is working on with federal authorities over risky mortgage-backed securities it sold ahead of the financial crisis. That would resolve a bundle of civil actions brought against the bank by several U.S. enforcement agencies. And today, we learned the bank is nearing a separate $6 billion agreement with more than a dozen institutional investors and bondholders to settle private claims over those same failed securities.
Bank of America may be facing some massive fines of its own. The bank was found guilty today for fraud on claims related to bad mortgages sold by its countrywide financial unit ahead of the financial crisis, a process the company called Hustle. After a 4-week trial in New York City, a federal jury found the bank liable on one civil fraud charge and found one former countrywide executive liable on the one fraud that she was facing. Now, a federal judge must decide how much to penalize Bank of America.
And a big trial began today in Detroit. A federal bankruptcy judge there must decide whether the city is really broke and if its historic bankruptcy filing can move forward. City and state officials say there's no other alternative for the beleaguered city, but city employees and retirees who would likely see their pensions decimated in a bankruptcy filing say the whole process is illegal. Scott Cohn has the latest from Detroit.
Protesters turned out by the hundreds on day one of a trial that's supposed to decide if Detroit gets relief from its creditors, including them.
What do we want? When do we want it?
A big part of Detroit's $18.5 billion in liabilities is more than $8 billion in benefits for retirees like Cheryl Labash, who says she's being asked to pay for the misdeeds of Wall Street.
We are not responsible. We should not pay. I live in the city of Detroit. I pay taxes in the city of Detroit. I own a home that's free and clear and is worth nothing because of what the banks did with the foreclosure crisis here.
But the attorney appointed by Michigan's governor to take over Detroit's finances insists bankruptcy and cutting benefits is the only option.
It gives us an opportunity to have a structured environment with federal court supervision for a comprehensive solution to some very real problems.
There's no denying there are real problems. A third of the residents below the poverty line, and in some neighborhoods, the abandoned homes outnumber the inhabited ones. But the legal issues surrounding a bankruptcy are much more complicated than that.
To prove it's eligible for bankruptcy protection, the city has to show it negotiated in good faith with its creditors. The union says it didn't, and that it is insolvent. The city says there's a mountain of evidence of that. The unions say the bankruptcy is unconstitutional, and the city is using pensioners as scapegoats.
You're talking about retirees that are making $18,000 a year. So we're not talking about, a lot of people with a lot of money to spare.
Detroit doesn't have money to spare either. If the city prevails, it could restructure its finances by spring. If not, recovery, if it ever happens, will take a whole lot longer. Scott Cohn, Nightly Business Report, Detroit.
Turning now to our market focus segment, we begin with Northrop Grumman, and it looks like defense cuts didn't hurt this big government contractor from reporting earnings much better than estimates. It said quarterly profits jumped more than 8%, and despite the decline in demand for drones and a drop in its backlog, Northrop still boosted its full-year forecast for earnings and revenue. The stock popped 4% to $105.56. Higher taxes reduced profits at U.S. Airways, but the airline's third-quarter results still managed to beat expectations. The airline also said it'll continue planning for a merger with American Airlines, even as the U.S. government attempts to block the deal. Shares dropped 2.5% to $21.40.
And Cree, a maker of LED lighting, warning investors that current quarter earnings will fall below estimates, the company citing higher marketing expenses. And that's what shareholders focused on, brushing off earnings and revenues that were just about in line with expectations. Shares down almost 17% to $61.77. Corning, the maker of glass for televisions and mobile device screens, soaring on a new tie-up with Samsung and a $2 billion stock buyback. Corning will take control over an existing joint venture with Samsung, a deal that it says will boost earnings immediately. The stock soared 14% to $17.52. And new members and lower medical costs helped WellPoint beat analyst expectations. The insurer raised its outlook for this year, but declined to give a forecast for next year, citing problems launching those new insurance plans under the president's health care law. WellPoint, one of the biggest insurers offering plans on the state-based exchanges. Shares of the company fell more than 3% to $85.48.
WellPoint CEO was just one of many insurance chief executives who met with senior administration officials today at the White House. Also at that meeting, embattled Health and Human Services Secretary Kathleen Sebelius. They were there to discuss the botched rollout of the healthcare.gov website and implementation of other provisions of the Affordable Care Act. Also in Washington today, some new rules on crowdfunding. This is a popular way entrepreneurs raise small amounts of money from many investors. Many startup firms rely on this technique to sell small stakes in their companies to investors. And now, federal regulators are trying to open the door to the everyday investor to help finance new companies. Eamon Javers joins us now from Washington with a look at the new rules the government is proposing. Over to you, Eamon.
Hey, thanks very much. Well, crowdfunding's got a lot of potential here for new entrepreneurial companies to raise money by going out on the internet and getting thousands of new investors to contribute money to the startup's cause. That saves them the trouble of going to the big banks and venture capital firms that they've traditionally gone to. But now the SEC says it's a little bit worried here about this new proposal in terms of fraudsters and scam artists that might take advantage of unsuspecting investors. So they say these new rules are going to underlie the overall effort here and protect investors. So there's a couple of key caveats that they put in place. They said no company will be able to raise more than $1 million in crowdfunding in a given year. They also said that investors themselves will be limited in two key categories based on their income. They said that they'll be limited to investing just $2,000 or 5% of their annual income or net worth if they make or own under $100,000 a year. Over that, they'll be allowed to invest 10% of their annual income or net worth if whichever is greater. So a couple of key caveats there for the companies themselves and for the investors. The SEC saying it's a little wary here of fraud and abuse that might take place, but they want to open this up to get as many people to have an opportunity to buy legitimate companies as they can.
A lot of people, Eamon, are very excited about this, and it's a potential. A lot of people, as you point out, worried that this is sort of send me your money over the internet, and I promise to put it to work in a good way. How long before these rules will actually go into place and these mechanisms will start operating?
Well, they say today that these are temporary proposed rules. They've got a whole process for actually implementing them. They say that could take up to 90 days, and a lot of the experts say it could be well into next year before we actually see companies raising money on the internet this way.
Yeah, and talking about mechanisms, I understand that the SEC is talking about a new kind of financial entity here, calls it a funding portal. What is it? How does it work?
Well, that's the new creature in all of this. The funding portals would be websites that start up as sort of aggregators, places where companies can go to post their need and say, hey, here, I've got a cool idea, send me some money, here are the details. Those entities are going to be subject to new regulation as well under this.
All right, Eamon, thank you very much. Eamon Javers reporting from Washington. And coming up, from Brooklyn to the Bakken, why one developer left a hot real estate market for an even hotter one in the middle of North Dakota. But first, how commodities, treasuries, and currencies performed today. Crude oil closed at a nearly 4-month low today, falling $1.44 a barrel to finish at $96.86. Part of the reason supplies are up. Data out today show that U.S. crude stockpiles rose last week after a 14-week decline.
And nowhere in the U.S. is crude found in greater supply than in the Bakken Shale. This is the massive supply of energy found in rock formations underneath North Dakota. And that's fueling strong growth in construction of homes, restaurants, drilling rigs, just about everything in the town of Williston, North Dakota. Brian Sullivan is there and has the story.
When Lewis and Clark came through here more than 200 years ago, there was nothing but river. But now the Bakken Shale oil and gas boom in Williston, North Dakota has led to construction everywhere. And I mean everywhere. Roads, restaurants, houses, and hotels are going up, filling up, and selling out as fast as they can. That's because people are coming from all over America to take part in the boom, and they need a place to live. And if you thought housing was expensive where you are, take a look at this. Brooklyn developer Ken Hartog bought a piece of land outside of town, and now he rents trailer space and mobile homes to workers. So what does 400 square feet get you? What's the rent on this place?
This is about $2,500 to $3,000 a month.
$2,500 to $3,000 a month for 400 square feet. That is more than Manhattan.
Way more.
That's more than Manhattan.
Yep, and it's in an RV park.
15 miles outside of Williston, North Dakota.
That includes electricity, though, at that.
So it's a bargain.
Yes.
It's a bargain. They can afford it because oil field workers are routinely pulling in more than $10,000 per month. 50 years ago, there were only about 30 oil wells operating in the area. Today, there are more than 6,000, and that number is expected to keep growing. And it's not just big, publicly traded companies like EOG, Schlumberger, and Continental Resources that are benefiting. Andy Ness is a 32-year-old entrepreneur who began with one crane 2.5 years ago and now has 8.
That one right there values about $400,000 right now. Yeah.
And you could, sounds like, given the strength of your business, even at $2.5 million, you could pay that off pretty quickly.
Yeah, I mean, they are an hourly rate machine, but you can definitely pay them off pretty quickly here because the wheels never stop turning. I mean, you can virtually work 24 hours a day around here, and a lot of times we do.
Some think this pace of boom can't continue, but as long as oil and gas prices don't collapse, look for the story of Williston, North Dakota, and the Bakken Shale to keep on growing. For Nightly Business Report in Williston, North Dakota, I'm Brian Sullivan.
And for more on the Bakken economy, check out our website, nbr.com. Pretty amazing that in certain pockets of the country, there's that kind of growth going on.
Midland, Texas, lowest unemployment rate in the country, and here, people making $10,000 a month working on those rates.
Those apartments, though, so to speak, $3,000, that's a lot. That's Nightly Business Report for tonight. I'm Susie Garrett. Thanks for watching.
And thanks for me as well. I'm Tyler Matheson. Have a great evening, everybody. We'll see you back here tomorrow night.
Nightly Business Report has been brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. We are TheStreet.com.
I'm Susie Garrett with a Nightly Business Report news brief. The record-breaking run-up in stocks took a step back today after a mixed bag of earnings from two blue-chip companies. Boeing shares soared more than 5% after a surge in profits on a huge backlog of orders for new planes. But profits at Caterpillar, the world's largest maker of earth-moving and mining equipment, plunged. Shares tumbled 6.5%. That set the tone for a down day on Wall Street. The Dow lost 54 points, the Nasdaq down by 22, the S&P fell 8 points, snapping a 5-day winning streak. Federal regulators have set a $1 million cap on so-called crowdfunding by small startups selling stakes to investors. And the price of oil fell to a 4-month low, now below $97 a barrel as U.S. crude supplies rose. Be sure to tune into Nightly Business Report right here on your public television station.